No, and we'll talk about that now in a moment, Michael. Very nice. I tell you what I want to do first of all. Just talk about two things. So I've said all along we've three kind of IT projects on the go. The first one was the app, right? And that's going to be improved over the next few weeks. So hopefully you've downloaded the app. If you haven't, go to your app store, type in Share Navigator. You'll see it there with our logo and download it. It just means it's handier for you to book web meetings with me, for example, if you're on the premium mentoring plan. It's also easier for you to see the results of the US 500 and click into the trades. And the other one we were doing was just the front end website. You're going to see has changed a little bit. So if you're looking to log in, there's a member login here. If you're on mobile, it's tucked away in the menu. But some of the feedback I got from the app was, most of it was very positive, but Kieran made a very good suggestion. He felt that with the courses, the old way we had it was here in our knowledge base, and that will remain there, so you'll still get access to that, right? But Kieran felt that he would like to know what courses he'd actually done, what modules he's completed. So we're actually moving all the course content as well over to a dedicated course management system. So you can see we've got the stock market investing courses up here, and we'll have all the options courses here shortly as well, right? But you click on enroll course, there's no cost to it at all, and you might be asked for a username and password. And once you've logged in once, you should be able to, every time you go in, you'll get access to the course. So you just click on enroll. If you don't have an account, you click on register now, and away you go. And when you're going through that, you'll see each module, and then you'll be able to click as completed as well. There's quizzes in there, so it's a much better interface. So the next category as such that will be there will be, you know, we'll go into the spread betting, the tax-free one, and then we'll go into the options trading. So over the next 2 weeks, they'll be added into this. I just wanted to make you aware of that, okay?
Okay.
And the final project is ongoing now, the US 500, which will be integrated into the app. That's literally going to automatically continuously download the performance of our US 500 as well. So that's going to have a much more slicker interface. So what you're seeing at the moment will be, you know, something like this, for example. You're probably seeing that. And whilst there's nothing wrong with it there, it's going to be a much slicker interface and easier for you to find yourself into the trades, okay? So just want to give you a few of those product updates. And then just to clarify one other thing, the mentoring fees, the premium mentoring fees have gone up for new people coming on board. It's not for existing clients. You will be on that discounted rate as long as you remain a member. So just be aware of that. It may go up slightly. The main price may go up slightly, but you will be prorated 60% off, okay? So just no need to panic, anybody. Your fees aren't going up from tomorrow or anything like that, okay? For new people who are joining in, all right, from now on. And it's still heavily discounted, and it's still great value. Okay.
Not affected by oil prices.
S&P 500. We would, some of you will be happy, some of you won't, and we can all thank Donald last night for creating a bit more volatility in the market. So there we go. There's your VIX up again. It's up 13% today. So the great news for us on that, and for people who haven't jumped in yet on the option trading, it means our premiums are going back up here on our option trade. So again, I'm just looking at the tax-free version for people in the UK and Ireland. Right now, we're probably down around the 5,800 strike, okay? When I was talking before last week, we were looking at the 5,500 and we could have got it. So in hindsight, could have pulled the trigger, but let's call a spade a spade. Last week, we didn't know what was going on here. You know, we were down here. We were creating new lows. There was a lot of things going on. We were talking about boots on the ground. And the right thing to do was to stay out of the market. This big rally gave me confidence, and the way we just broke out here gave me confidence that, you know what, the off-ramp is being created, because it was actually the Iranian minister's comments that caused this rally. It wasn't necessarily from the US side. It was the fact that the Iranian minister said, yeah, we would like a deal, and there was some sort of information starting to feed through to the markets that they're open to negotiation, and that's what caused this big rally. And then, of course, we've seen the address last night that was as clear as mud, really. Basically, in 2 weeks' time, we're leaving the Strait of Hormuz, and it's up to Europe to go and get their own oil. That type of rhetoric was being pushed. That doesn't solve anything. That keeps the Strait of Hormuz closed. And that's why you're seeing oil prices come down here. Where are we gone? We're up here 10%. Oil has jumped up now significantly here. So that's why our markets are under pressure in pre-market. And we're going to open up back into this downtrend, okay? So just a couple of things I want to mention. The markets US markets are closed tomorrow, okay? So if we put on a trade today, which I might do, by the way, if there's a big enough sell-off today, I might put on that trade. Just please bear in mind, you have to get through Friday, Saturday, and Sunday, and then the markets open up Monday and see what happens. So there's a lot of things can happen in those 3 days. And I would suggest if he is going to make a move, it's going to be over those 3 days. He'll prefer to do it when the markets are closed, you know. So just have that in mind. And what I want to talk about is risk management. So we have a couple of ways of approaching this. We can use today's volatility to jump in, and we could probably end up right in the 5,800 short puts here, get our 2.5%. So for the people based in Europe, and forgive me for the people who are using the interactive brokers, but I just want to explain the maths here. We recommend betting $12 per point for every 10K account, okay? So if you have a 10K account, and let's say we did this, where 30 by 12 is your bet size, that's in US dollars. Converting that back into euros, let's call it 117 for now to include the IG costs. That gives you a €307 profit, right? On a 10K account, which is 3%. But remember, we don't wait for it to expire worthless. We take it at 75% the max profit. So that's where we're kind of getting the maths from. That's 2.3%. But that's why we prefer 32, 33 is the magic number for us as such, you know? So just be aware of that. That's where we're getting the numbers for this. So we could jump in and do that today. So I want to just paint a picture. Let's say we did it today. Fast forward the clock. There's absolute carnage next week in the markets, okay? And the next thing we're down at 6,200. And you're not feeling as confident as this. Now we've got to already figure out, well, where can we roll it out and down to? So rolling it out and down is the process of buying ourselves back out of this one for April and then opening up the new one for May. So to buy ourselves out of this one, let's call it 32 at the moment. So what we do then is go to May and see, well, where would we get 32 in? And you can see we'd be rolling it down to about the 5,400 level. So right now, if we were actually to put a trade on, which I'm not saying to do, by the way, so please be clear on that. I'm just saying, let's say somebody jumped the gun. At least you'd know, you know what, I could actually roll this out and down to about 5,400 if the SH1T started hitting the fan next week, okay? And just to put that into perspective, let me go back to SPX. Just in terms of what a price drop from the peak that is down to 5,400, that's a total of a 23% drop in the market. So that would be the equivalent of pricing in a bear market in a period of the next 3 weeks as such. So statistically, we would have a great chance of being okay on this particular trade, okay? Now, my preference is to wait till next week. Now, please bear in mind, this is what could happen, right? Right now, the market is going to open up somewhere down here, okay? This is what it's going to look like. So we're back into this down channel, okay? We're back into this down channel here. I always said this has got to get a retest. Normally when a low is put in, it does get a retest. Having said all of this, if Donald Trump comes out and says something today, we've agreed a deal, this market is going to jump 5% in a heartbeat. Okay, but like, how do you predict that? It's virtually impossible. By waiting, let's talk about waiting. What is the damage in waiting? So let's say, for argument's sake, the market opens up here, Donald comes out, makes a positive announcement, and it jumps up here. You're going, oh, we've missed this trade. That's terrible. Well, you haven't really. What we would have then is certainty. We would know the Strait of Hormuz is open, and then all we would do is bring our strike prices up, and we'll still get our 2.5% in. But what we would have then next week is some certainty as to where we are with the market. Right now, going into a long bank holiday weekend, there's a lot of stuff can happen over the next 3 days. Right now, you're seeing after one speech last night, oil up 10%, right? So what happens if we double down now over the next 2 or 3 days and oil goes up another 20% over the week? You know, when we open Monday much lower. So we've two choices today. We can probably ride around the 5,800 short puts and then manage them down to 5,400 if things go wrong, or we can just stay out of it. And if we stay out of it till Monday, our risk in that is actually the market pops big on Monday. Maybe there's a real positive announcement. And everybody, you will feel like you've missed the boat. But I'm trying to say to you now, you haven't missed the boat. We will still get a trade on for April. We'll just be changing our strikes up. But what we would have then on Monday is certainty. And that's what we need. Right now, we don't have certainty. And as it stands now, unless Donald Trump comes out and says something to keep the markets happy, we're probably going to go down and retest these lows again. And if that happens, then we'll be able to go and probably write the 5,500 strikes for April, which would be I would be in a much happier position of that if we were down kind of at 5,500. So that's kind of my rationale at this moment in time, guys, on it all. I'm leaning towards just waiting until Monday, to be quite honest with you. I just think that we're back into that down channel. I think the lows get a retest, and I think we could end up writing next week puts for April. If we don't, as I said, if Donald Trump says something really good for the markets and everything's calm and settled, we might end up writing the 6,200 puts for April. But at least we'll know the Strait of Hormuz is open, and we don't have that.
Yeah, one other caveat on that, Stephen, is he has set that 6th of April, which is Monday, deadline for opening the straits. He's now got all his pieces in place with the airborne, the Marines and all of that. If he wanted to go in, I suspect he will go in over the weekend or Monday.
Yeah.
And that's the one thing that's been in the back of my mind and holding off doing any of these trades, because I think, he's a bit irrational, to say the least. And I think he wants a win, and that might give him the win that he's looking for,
Yeah, the only thing is, once he puts I agree with you. That's my fear too. My fear, though, is once he puts those boots on the ground, it's very difficult just to take them straight back out again. And then this becomes a long, protracted thing, which is worse in my eyes,
Yeah.
So I agree with you. That's why I would lean towards staying out. I don't see the need to do this, to jump in today. And if we get positive announcement and the market is up over the 200-day moving average, don't be disappointed. Don't go, oh, I've missed the boat. What you've got is certainty. Right now, you've got total uncertainty. We've got oil. Look, the thing that's causing the problem in the global economy, look where it is. We're up tipping those highs again. That's not good. That's not good. No matter what way you slice and dice it, it's just not good. We're up here. This is where this USO is going to open up at the market. So just to put it into perspective as well, it's starting to hit Europe now. Even in Ireland, we're starting to get kind of siftings into the media saying that we might have to ration fuel soon. They're not saying yet, then they're trying to downplay it at the same time. But it's been bandied about. So we know the Prime Minister of Australia made an announcement to the people: if you can use the bus, don't get into your car, things like that. So this is hitting everywhere. It's a big, big problem. And therefore, I think, why not just err on the side of caution and just exercise a bit of patience? That's all I'm trying to get at today. Having said that, if people did jump in, I don't think it's the end of the world either. You will be able to manage the trades down, but I would prefer just to give it another few days till early next week, and then let's see where we lie then, if that makes sense. Any questions or comments, guys? No?
I think Stephen, Trump caused all of this, really, you could say. So he's going to be looking at the oil as well, and it's getting to a state where it's going to cause problems worldwide. So he'll be looking to get this kind of finished or something done with it as soon as he can. And his team, I'd say.
Oh, 100%. Yeah.
So it's not in his interest this dragging on either.
No, it's not, and I agree with you. I think he's looking for the off ramp. The question is, and I know this sounds ridiculous, the Iranians have him over a barrel, really. Pardon the pun.
Absolutely, yeah.
With absolutely no military ability to defend themselves really at the moment, but they have the economic cards, and they know that. So
yeah.
It's not. I don't think it's as simple as walking away now. He's after.
No, exactly. Yeah.
He's created such a problem for everybody.
The elephant in the room.
Yeah, I agree. He wants out.
Yeah.
And I think what he's getting frustrated is the Iranians, obviously in the background negotiating, are they're picking up on this and they're going, we're going to squeeze them for everything we can get our hands off them, So. And they're not playing ball and negotiating front. That's why the threats of we're going to obliterate you are there. And I think he's gone that erratic. It wouldn't surprise me if he did it,
Sorry,
yeah,
Stephen,
it's a long weekend,
Yeah.
Sorry, Stephen, just this one thing. Why do metals continue to go down as the oil goes up?
It's a great question. First of all, gold normally should be going up in this uncertain environment, okay? There's a couple of theories out there. Well, the first one is real. That is, if you look at the strength of the dollar. So you got to keep watching the dollar and bond yields, okay? So look at the dollar here versus the euro, for example. It's strengthened today again off his comments. So look what's happened since. This is a strengthening of the dollar. Now, why is that important to gold? Well, gold is quoted in US dollars. So as the price of the dollar strengthens, the value of your gold holdings gets less and less, if you think about it. So you've got to just be careful of that. It depends on what country you're coming from, but the price of gold being quoted in dollars is significant, right? But the other thing really is central banks, and there's rumors, and they're only rumors, that certain central banks who've been the biggest purchasers of gold have been selling off some gold because of this geopolitical risk. And that's another theory that's out there too. Silver, I think silver is just a gambling play, to be quite honest with you. Silver is usually brought up on the coattails or brought down of gold, and it usually moves a lot more aggressively. Silver had another issue going on with it as well. That was China, because of the tariffs, had initiated export curbs on silver, which impacted the price. And again, if China all of a sudden said, no, we've lifted our export curbs on silver, then you could see the price of silver collapse too. So silver kind of goes on the coattails of gold. And again, I want you to think about people might be getting margin calls right now. And if people are getting margin calls, they have to sell other assets to keep their positions open. So there's a number of factors that could be at play here. Not any one is correct or an absolute certainty, but the price of the dollar is a factor, and certainly central banks will be a huge factor too. And I would say short covering what's going on. So again, if there was a load of people short on the market, and then this, for example, happened, and you got this big rally up, all those people are having to close down their positions at a loss in the market probably, and might have to start selling other assets to counter for it. So a lot going on there, Clive.
Okay, that's fine. Thank you very much, Stephen. Thank you.
You're welcome. So just on gold, guys, I think gold, I haven't been a fan of the metals, but if gold revisits the low down here, I actually think it could be a good buy if you think this thing gets resolved. I actually think we're going to take out 5,000 again. So this is something that's on my personal watch list, to diversify away from stocks at some stage. And you can do that through simple ETFs. For people in Ireland, though, just one thing, ETFs are taxed at income, which is stupid and it's ridiculous, but it is what it is. So if you want to try and avoid that, you can you can buy futures contracts, for example, but you need to know what you're doing when you're buying futures contracts too. That will return it back to CGT for you. So just be aware of that, just from a taxation perspective. But if you are outside of Ireland, a simple ETF like GLD, that basically tracks gold prices. And you can just invest into that. So I'm watching this, but I'm waiting for the conflict to end. And I'd probably allocate about 20% of my portfolio to gold then at that stage. But between now and then, my own opinion is, Clive, I think we could revisit these lows here. And I think if we're getting down here, you know, could maybe go as low as the 200-day moving average. I think you could be looking at 25% upside then when the conflict ends. So I'm watching that closely, and I'm getting ready to buy gold myself. Just moving back on to stocks and the S&P. So I just want to be clear, I am holding off. I will not be trading today. I am going to wait till next week because of the bank holiday weekend, because where oil prices have gone, and because of the unknown over the next 2 or 3 days. And just to close the message off, if I don't want anybody saying we missed the boat to me next week, I'm telling you, I couldn't care less if I missed the boat. If it jumps up, so be it. I'll still get my 2.5%. It'll just be at a different strike. So just be okay with that, with missing out. But right now, I just can't stress enough. There's an awful lot of uncertainty and moving parts out. I think potentially we put the low in the market, right? It's possibly already in, but a lot will depend on next week, in my view, and what the rhetoric is next week. So for that reason, I probably wait to see does our low get retested, and then if that gets a retest, I'll probably be a lot more comfortable actually jumping in then and writing the 5,500 puts, because I know then if that gets into trouble there, I can roll down below 5,000 pretty much out into May. So I much prefer that. So that's what I'm waiting for. And again, if the market jumps next week, so be it. We'll deal with that when that comes. But I want a bit of certainty. Okay. Just a couple of things on individual equities. Oracle, you may have heard yesterday, they've announced massive layoffs. Unfortunately, that's usually good for stock prices. Okay, so obviously they can become more profitable as a result of the layoffs. But you can see it's kind of bouncing around its lows. I like in the stock here. It's broken its downtrend. It's meandering sideways. So for people who are interested in individual equities when this is over, the likes of Oracle, Nvidia, I keep talking about, Nvidia, even Microsoft, to be honest with you, down around these levels, I think is decent enough. Amazon, down around these levels, are good too. So these are the type of stocks. And then I've spoken about Alaska Airlines on several occasions. You can see that was up like 10% over 2 days. And now it's coming back down again because oil prices have spiked again. So when you think this is over, if you're looking for individual equity names, Alaska Airlines, Oracle, Nvidia, Microsoft, Amazon, those type of stocks, I think would be the ones to be looking at. I would much prefer if you stuck to a broad-based and just bought the S&P 500. But I appreciate for people based in Ireland that the stupid tax rules don't make it attractive. And I can understand why you might want to go into individual equities. But yeah, that's the way I would do it, unless you're doing it through a pension. If you're doing it through a pension in Ireland, it's not the same taxation, obviously. So I just thought I'd make you aware of that. But I'm not buying stock now. I want to be clear, I'm doing nothing now, and I know you're probably sick of it. You're anxious to trade. You probably want me to go short. How can you go short when all it takes is one announcement and the market could be up 5%? So I think it's impossible to short the market as well. I think the best thing to do is just stay in cash. One trade that, if it lines up again, will be the 10-year. So looking at the 10-year yield, and again, keep watching this 10-year yield. As this yield creeps up, it's usually going to be bad for the stock market in this environment. Normally, that's actually, think about it. Investors are going to go chasing this extra yield that you can get out of the US bonds, which are considered risk-free. Also, the borrowing costs have gone up for individuals and companies, and also the discounted valuation rate of stocks, the discount rate goes up too, which makes the present value of stocks lower. So interest rates going up are not a good thing for stocks either. So you got to keep an eye on that. But the opposite of that is TLT. And TLT goes down when interest rates go up and vice versa. So I think if we get down to this low again, right in the $85 puts on TLT, I think will be a good idea. I personally think this will be over sooner rather than later. That's my belief. I think Donald Trump is looking for an off-ramp, but it's what he does in the interim I'm concerned about. And for that reason, I'm not ready to do it just yet. But I do think interest rates are probably going to stay within this range. So if we meander back up here, let's say to 4.5%, I think then that TLT trade becomes very good. And you can sell puts on that, or you could buy the instrument outright itself. And it's, you know, it tracks interest rates. It pays you a 4% dividend per year. So that's something that I like too. But again, unfortunately for Irish-based investors, you're going to pay income tax on that, not capital gains. So that's why I would stick to just selling the put options on it. And that's subject to CGT, okay? So that's kind of what I wanted to cover today, guys. I'm sure you have some questions for me. Jump in if you have. No? We're all good? Okay. Just a reminder then, if you're going onto the new website, don't forget to download our app. You can get the links here. If you can search in your app store for Share Navigator. The direct links are here on the homepage of the website too. So please download our app and let me know what you think of it. There are improvements coming down the tracks very, very soon already. But always interested in your feedback, okay? Alrighty, guys, unless you have any questions, I'm going to leave it there. Okay. Have a good weekend, folks. Enjoy the Easter break and stay safe.